Hey guys, welcome to the video. So in this video, I'm going to talk about a pretty big mistake I learned in the market, how I learned from that, and just some overall advice. Of course, I'm not a financial advisor, these are just some thoughts I'm putting out there. Alright, so as some of you guys could have guessed, I'm sure, this is about Bed Bath & Beyond, ticker symbol BBBY. So this is a high conviction trade from me a couple weeks ago. I called this one out at $17 pre-earnings. So I had a thesis of the short squeeze run up to earnings, and then I was expecting an earnings beat and a further run up. So what we got from Bed Bath & Beyond earnings, we got a slight disappointment. If you really looked into the earnings, they were really not that much worse than expected overall. So anyways, I had a very strong thesis on this trade. I had a very good feeling about earnings. So I ended up taking profits on options the day before earnings just because it had run up so much. And usually with options, if you're up that much, I always do take profits just because the options can go down just as fast as they went up. But I decided to hold my shares through earnings. The reason because I did expect big things. If we got a slight beat, we would have that start of the short squeeze. And overall, I just thought that the reward was way more than the risk overall. So anyways, so earnings came out, we got that slight miss, and the stock dropped about 10% immediately. So it went up from about $21 down to $18 as an overreaction. Now it did recover slightly, down up to the $19 range. And I actually posted on Twitter just because, to be open with you guys, I did post that I was planning on being out of 80 to 90% of my position before market open, just because my overall thesis on this trade was the earnings, and I was expecting an earnings beat. If we did not get that beat, I was just planning on cutting loss or taking my small gains, whatever. So my overall cost average was in the low 18s. I ended up selling about 90% of my position at about $19 before market opened, and I still felt really good about the trade. So I made a ton of money on the options, of course, selling right before earnings, and I was still up a good amount on shares, about 4 to 5% gains total on shares even after the dump off, because my average was in those low 18s like I was talking about. But anyways, we got that big dump off, and we did get a slight recovery throughout the day, and it was pretty stagnant throughout the day. And of course, I took profits just because I was looking for opportunity elsewhere. I didn't want my cash tied up in a stock that could have kept going down if the market was to react bad to earnings and everything like that. I ended up selling out of the rest of my position about midday, so I was 100% out of Bed Bath & Beyond the day of earnings after earnings happened. So the days following, the stock proceeded to run up like crazy. We saw the stock up at $29 as a high, and currently is trading for in the mid 25s. So what happened? Why did this go up so much? First of all, like I was talking about, earnings were not that bad of a miss, and overall did think the company was overvalued for what they're doing as a business, the management behind them. The reason that the revenue was not as much as expected and they missed out earnings is because they're focusing more on online sales, like I've been talking about, and they were closing up a bunch of their retail stores to focus more on online sales and to get those gross margins up. So like I was saying, my thesis was on the earnings. Now looking on the other side of things, after the earnings drop, I usually play the overreaction to earnings. Whenever they overreact, the stock drops a ton, I will always buy up those stocks and play the bounce back. Now, I ended up selling just the opposite of my strategy just because my thesis was done right. This is a big mistake that I made. I should have looked past that. I should have stayed with my original thesis, but also just looked at it as a longer term play possibility. Because of that short float being over 70%, the short squeeze was going to happen sooner or later, and I made the mistake of just looking short term. I could not even look past the day after earnings just because I didn't think far enough. And like I was saying, with my strategy, I would have been buying up that dip heavy after earnings, expecting that short squeeze a couple days after the overaction passes over. And we got exactly that, a huge run up all the way up to $29 per share. So the overall big mistake that I made was sticking way too close to my original thesis of just playing the earnings. I could not look past that. I was not open-minded at all on the trade, and that's a big mistake that I made that I learned from for sure. Just because if you look on the other side of things, if you're holding position, your mindset is so different compared to if you're looking to get into the position. Like I was saying, I would have been buying up that earnings dip heavy. Instead, I sold on that dip. So the overall lesson here is to be open-minded with your trades overall. If your original thesis does not play out, you can always build out on that thesis. Even if the short-term thesis doesn't work, you can look a couple weeks out, see if there's any other catalyst, see if that short squeeze would have a chance. If I would have looked past that, of course, the short squeeze was bound to happen sooner or later, and I just didn't see that just because I was playing the short-term earnings and not looking past that at all. I wasn't open-minded with the play. This is also a perfect example of why you should not copy my trades. Look, I bring the info to you guys. I will never tell you guys when to sell a stock. I'll tell you guys when I sell, just to be open with you guys, but I'm not telling you guys to sell because my timing is never going to be perfect. Bed Bath & Beyond, perfect example. I sold way too early. I missed out on, 40% gains, potentially a ton more with options. So on this channel, all I do is bring info to you guys. I give you guys my personal thesis. I never tell you guys to buy or sell, and I will never tell you guys when to sell. All those comments on Twitter, all the DMs I get of asking, should I sell this? I'm not going to answer just because my answer is never going to be perfect. I'm never going to know the exact perfect time to sell. I'm never going to have the timing down perfectly of when to sell or when to buy or anything else like that. It's always up to you guys when you buy, when you sell. Now in the private Discord group that I have, I will tell them exactly when I buy and sell something, but I will never tell them to buy or sell something. It's just what I'm personally doing so they can get some ideas from that, but it's never them copying my trades. It's just them learning what I'm personally doing. So overall, the outcome of this video, what I personally learned, just be more open-minded with the trades. Don't stick to your original thesis too hard. If something changes, such as the earnings miss, should have rethought the entire thesis, should have thought about the coming short squeeze that is bound to happen. Only look short-term, only look at the short-term thesis, and did not expand my thoughts on the topic overall. Which is something that I think we can all learn from, is just being open-minded with your trades, not being too tight on that original thesis, just thinking about the future, what other catalysts there are, if there's a catalyst of that short squeeze that could happen soon, and everything like that. If you would have copied my trades using Twitter or Instagram or the Discord chat or anything like that, now you would have made money overall by selling those options the day before, but you also would have missed out on a ton of gains if you would have sold when I sold at the $19 range instead of selling at $25 plus like you would have had if you would have just held on and played off that short squeeze that was bound to happen. Alright guys, anyways, hope this video was beneficial. If you're interested in joining the private Discord group, that link is down below. If you want to get $30 free just by opening an account on M1 Finance, you don't have to fund it at all. You just open it, and within a week or so, you will get funded that $30 for free. You could take that out, do whatever with it. It's just pretty much free money by opening an account. It's worth the time for sure. That is an affiliate link, so it does help benefit the channel, and I would greatly appreciate that. Please like the video. Please subscribe if you haven't already. I would appreciate that as well. Thanks for watching, guys. Let's get rich.